Hi, I'm Grant Stephen.
And I'm Kris Bernier.
And we're the two investment guys. This week, Kris and I want to talk a little bit about the markets again, but until we get to that, just talk about the indice returns so far. We've got Toronto's down about 3% so far this year, whereas the Dow and the S&P are up about 2%, Kris. We've got in European, those markets there, we've got London's down about 3%. France is up about 1%. Germany is the global leader, up about 4%. And when we turn to the major Asian markets, we've got Tokyo down close to 6% on the year, and Hong Kong is down about 4%. So decidedly moved into negative territory, or certainly off the top, Kris. Been a slew of softer economic data. This is one of those instances where our theme today is around patience is required in an over-indebted world. And we wanted to talk about a couple of things. We'll start with the situation in Greece at the moment.
Sure. Well, it's been in the news for a long time, and people are actually growing weary about the story. But the Greeks are set to vote in Parliament on austerity measures, and these austerity measures are a prerequisite to them getting their next set of loans from the IMF and the European Union. So it's certainly something that needs to be done. We're in the midst of a 48-hour strike over there. There's rioting in the streets, and nobody wants this to happen. So it's kind of unclear at this stage as to what way it will go. But rest assured that I think the Parliament is going to be working overtime in the next couple of days to try and get this vote through.
And, you know, Kris, we get the question all the time, why does it really matter when Greek GDP is 3% of the EU? And, you know, that's a good point on the surface, but the reality of it is there's well over $400 billion in loans from the major European nations to Greece, and France is the #1 country in terms of its lender, and a lot of those loans are sitting on balance sheets of French banks. That haven't properly reserved for it. At least that's the way it looks. So it really does matter, even though Greece is a small country. Let's turn to a much larger country and the issues down in the United States.
Sure. Well, the U.S. has continually set a debt ceiling in their budgetary process, and they've reached that debt ceiling now. They've done a temporary, some budget measures to allow them to continue to operate, but they have set a deadline of August the 2nd to set a new debt ceiling for the country and set up a budget that hopefully will move them towards a more balanced situation and eventually, hopefully, surpluses.
So down there, that could be more of a technical default, which I think is very unlikely that it actually happens. I think there is some political posturing going on. Having said that, you know, clearly there are overwhelming debt issues in the United States that need to be dealt with. They have the ability to turn that around. You know, it's going to require some changes in the tax laws on the revenue side, and probably some significant expense cuts. You know, and they need to find the proper balance between those two issues, Kris. I think that, you know, the market today, why does it matter, is because it has such a high level of uncertainty over capital markets around the world, and everybody says, but how does that really affect me? And when you have this level of uncertainty before you, it's very difficult to move forward in capital markets, which they always like to forward price things. So that's going to be challenging. Why don't we talk a little bit about what somebody should be doing here?
Sure. Well, for some time now, we've been talking about, first of all, realigning your expectations around market returns, because in a slow growth world, which is what we're in, returns are probably likely to be lower than what we've experienced in the past. We've seen the rebound off the lows, and now things are going to continue to grind forward. And while corporate earnings have been good, it's going to get tougher on a go-forward basis. So we've said for some time, stay in high quality and focus on getting income while you're waiting for the growth to materialize.
Yeah, so we've always been advocating the yield play here in terms of, first of all, it supports the asset prices, but also, you know, that our belief is if we're in a single-digit type return environment, then at least half of your return is going to come from a dividend. And this is a very difficult stock environment to trade stocks for growth and make money on the capital gain side. So again, we're back to the high-quality yield story, Kris.
And if you followed us at all throughout the spring, we've talked a lot about looking at your portfolio, working with your advisor. Don't be afraid to take some profits and don't be afraid to sit on a bit more cash than normal. Make sure you talk to your advisor about some of these ideas. We want to thank you again for your questions and comments. Please keep them coming. You can contact Grant and I at twoinvestmentguys.com.
Join us next time. We're going to continue talking about the dynamics at work in the markets. So until then, I'm Grant.
And I'm Kris.
And we're the Two Investment Guys.